As we enter July 2026, the global stage is witnessing a flurry of impactful events. From significant economic shifts to geopolitical tensions, the ramifications are vast. Today, we dive into the top 10 stories shaping our world. Here are today's top 10 stories you need to know. In the world of technology, Alphabet's recent stock slump has prompted analysts to label it a tactical buying opportunity. This comes as the company plans to expand its custom chip data center capacity into 2028. Investors are currently overlooking this strategic move, which Morgan Stanley believes will drive long-term value in the race for AI infrastructure dominance. Alphabet has faced scrutiny amid broader market volatility and competition from other tech giants. Analysts suggest that now may be an opportune time for investors to capitalize on the dip. The growth in AI and custom chips is expected to play a significant role in Alphabet's future profitability. As the company adapts to the ever-changing technology landscape, the focus remains on how effectively it can leverage its resources. Investors are keenly watching for updates on the company's progress in this area. The emphasis on custom chips is indicative of a broader trend in the tech industry, where efficiency and speed are paramount. Looking ahead, Alphabet's ability to innovate will be crucial in navigating market challenges and positioning itself as a leader in AI technology. Oil prices have seen a significant drop in the wake of a preliminary peace agreement between the U.S. and Iran. This development has sparked a cautious optimism in the markets. However, experts warn against premature recovery expectations due to ongoing geopolitical tensions and uncertainties surrounding supply. Despite the potential for stabilized prices, analysts highlight that Russia's impending diesel export ban could trigger further fuel shocks. Global fuel inventories remain precariously low, raising concerns about future supply disruptions. The fluctuations in oil prices reflect broader economic implications, affecting everything from transportation costs to inflation rates. As the international community watches closely, the potential for renewed volatility remains high. The situation illustrates the delicate balance of geopolitical relations and their direct impact on global markets. Investors are advised to stay vigilant as developments unfold. Looking forward, the oil market's recovery will hinge on sustained diplomatic efforts and the resolution of underlying supply issues. In financial news, the healthcare sector has emerged as the leader in institutional loan issuance for the first time since 2015. This shift indicates a significant change in capital allocation strategies as investors pivot toward biotech and medical innovation. The rising demand for healthcare solutions has been further underscored by the successful performance of French biotech firm Abivax, which saw its stock soar by 25% following promising data on its experimental drug for bowel disease. This trend highlights a growing confidence in healthcare investments as the industry adapts to evolving market needs. Additionally, the decline in software loans reflects a broader reassessment of priorities among institutional investors. As healthcare continues to dominate the conversation, many are questioning the sustainability of this surge. The implications for future investment strategies are profound, suggesting a possible long-term shift in focus towards sectors that address critical health challenges. Moving forward, the healthcare sector's ability to innovate will be vital as it navigates both opportunities and challenges. Nike's recent earnings report has led to a disappointing reaction in the market, with shares falling 3.5% in pre-market trading. The company's quarterly results did not meet investor expectations, raising concerns about its turnaround strategy under CEO Elliott Hill. Analysts are particularly worried about declining sales amid economic challenges in China, which has been a critical market for Nike. The cautious outlook for the coming quarters has further dampened investor sentiment. Nike's struggle to regain momentum highlights the complexities of the global retail landscape, particularly as consumer behavior shifts in response to economic pressures. The company is now at a crossroads, needing to address its operational challenges while also responding to competitive pressures. As the retail sector evolves, Nike's ability to adapt will be crucial for its long-term success. Investors will be closely monitoring how the company plans to navigate these headwinds. Looking ahead, Nike's strategy will need to focus on innovation and market responsiveness to regain investor confidence. U.S. airline stocks are experiencing a remarkable surge fueled by cheaper jet fuel and an insatiable demand for summer travel. Major players like Delta and United are seeing their shares soar as the sector rallied by 20% in June. This marks a significant turnaround from earlier volatility linked to fluctuating oil prices, which posted their largest quarterly drop in 6 years. The current landscape indicates a robust recovery in the travel industry as more consumers return to the skies. Airlines are capitalizing on this momentum, adjusting their capacities to meet the growing demand. As travel resumes, the outlook for the airline sector appears increasingly positive, with expectations for continued growth throughout the summer months. However, the industry remains cautious about potential economic headwinds that could impact future travel trends. With the summer season in full swing, airlines are poised to benefit from high passenger volumes. Looking forward, maintaining operational efficiency will be key as the sector navigates a competitive landscape. The ongoing AI infrastructure boom has significantly influenced the stock market, driving rallies in semiconductor and memory stocks. Companies like Intel, SanDisk, and Lam have seen substantial growth as demand for AI technology surges. However, this bullish environment is contrasted by increased volatility, with spreads between stock and index volatility reaching levels not seen since 2015. This discrepancy has left some key players, such as AMD and Micron, vulnerable to market shifts. Despite the risks, Meta's recent announcement of a cloud business aimed at selling excess AI compute capacity has provided a boost, causing its stock to surge between 8% and 10%. As the tech sector continues to evolve, the focus on AI infrastructure becomes more pronounced. Investors are grappling with the duality of opportunity and risk in this rapidly changing landscape. The AI boom is reshaping market dynamics, creating both winners and losers among tech stocks. Looking ahead, the sustainability of these gains will depend on ongoing innovation and market adaptability. In a significant development for the financial markets, Federal Reserve Chairman Kevin Warsh has signaled that a rate hike may be inevitable. Speaking at the ECB forum, Warsh reaffirmed the central bank's commitment to its 2% inflation target. The remarks come amid growing concerns over the U.S.-Iran peace deal and the rapid expansion of AI infrastructure. Minneapolis Fed President Neil Kashkari has projected that one interest rate hike could occur this year, reflecting the Fed's cautious approach to managing inflation. Warsh's announcement also indicates a shift towards global coordination in monetary policy, as staffing for central bank task forces will now include non-American experts. This move suggests a proactive stance in addressing international economic challenges. As investors digest this news, the implications for the economy are profound, particularly for sectors sensitive to interest rates. The financial community is closely monitoring the Fed's next steps, with many anticipating further guidance in upcoming meetings. Looking forward, the interplay between monetary policy and economic growth will be critical in shaping market expectations. The stock market has just closed its best quarter since 2020, with major indices posting impressive gains despite uncertainties stemming from the ongoing conflict in Iran. The Dow Jones Industrial Average rose by 8.9% in the first half of 2026, marking its strongest performance since 2021. This rebound is significant, especially considering the market's tumultuous history over recent years, including the disruptions caused by the pandemic and inflationary pressures. The Nasdaq also experienced its most robust quarterly results in 6 years, driven by a frenzy of new listings, including a notable IPO from SpaceX. This surge in market performance reflects a strong recovery as investors regain confidence amid a complex economic backdrop. The record-breaking $129.3 billion raised in new listings demonstrates a robust appetite for equity, particularly in the technology sector, which continues to innovate and attract capital. However, concerns regarding persistent inflation and potential interest rate hikes loom large, creating uncertainty. Analysts are monitoring geopolitical tensions and economic indicators closely. Sustaining this momentum will be crucial, as future policy decisions could significantly influence market stability and growth trajectories. In the world of finance, SpaceX has emerged as one of Wall Street's hottest stocks, shattering trading volume records in recent days. This unprecedented trading frenzy is largely attributed to the company's successful execution of its ambitious projects, including the much-anticipated launches of its reusable Starship rocket. Analyst Dan Ives has expressed bullish sentiments regarding Starship, deeming it a transformative asset for the burgeoning space economy. This optimism has propelled SpaceX to lead the staggering $129.3 billion raised in new NASDAQ listings during the first half of 2026. The surge in interest reflects a broader trend of increased investment in space exploration and technology, as private and public sectors recognize the potential for profit and innovation. Companies such as Blue Origin and Virgin Galactic are also vying for market share, intensifying the competitive landscape. Investors are eager to capitalize on the growth potential within the aerospace sector, seeing it as a new frontier for economic expansion. Looking ahead, the success of SpaceX could pave the way for groundbreaking advancements in space travel, satellite technology, and even interplanetary exploration, positioning the company as a key player in shaping the future of humanity's ventures beyond Earth. The anticipated signals of a possible Federal Reserve rate hike have reverberated through financial markets, contributing to an air of uncertainty. Federal Reserve Chairman Kevin Warsh's remarks at the ECB forum emphasized the importance of maintaining a 2% inflation target, a benchmark crucial for economic stability. His comments come at a critical time when investor confidence is already wavering due to geopolitical tensions stemming from the U.S.-Iran peace deal and the ongoing AI infrastructure boom, which has created both excitement and apprehension in markets. Minneapolis Fed President Neil Kashkari's projection of at least one interest rate hike this year adds to the market's apprehensions, indicating a shift in monetary policy that could reshape financial dynamics. With inflation concerns intensifying, the Fed's potential actions could have far-reaching implications for various economic sectors, particularly in housing and consumer goods. The prospect of higher interest rates tends to dampen consumer spending and business investments, creating a ripple effect throughout the economy. As investors brace for the impact of these developments, the financial landscape remains precarious. The Fed's next moves will be closely scrutinized, as they could ultimately shape the trajectory of economic growth. Looking ahead, the balance between inflation management and economic expansion will be critical as policymakers navigate these complex challenges. Thank you for watching. Which story shocked you the most? Let us know in the comments below, and don't forget to like and subscribe for more updates.